Hey. Welcome to our Real Estate Wisdom podcast, episode number 39. Real Estate Wisdom is your go-to podcast for the latest insights and trends in the real estate market. But before I start my this podcast, I want to know from you, what do you think? Is Bank of Canada going to cut the interest rate in June? Or in July, or you think it's not happening, it might happen in September. Well, today we are diving into an economic update from Benjamin Tal. Benjamin Tal is a Deputy Chief Economist at CIBC, and recently I attended his webinar, and he was giving the update. So we will explore the key points which he made about the Bank of Canada's monetary policy, inflation, and the housing market. So let's get started. Taj mentioned that the Bank of Canada is likely to cut interest rates soon. And why is this significant? He said that bank is expected to cut interest rates either in June or July. Isn't that the good news? That's all we're waiting for? Well, this is significant because it marks the beginning of an easing campaign aimed at stimulating the economy. The decision to cut rates is influenced by various factors, including inflation trends and economic growth. The Bank of Canada has the flexibility of justifying rate cuts by selecting from a range of inflation metrics that support their narrative. That's what he has to say. Isn't that interesting as well? So, how does the Bank of Canada decide on these rate cuts? The Bank of Canada looks at a variety of inflation measures. Tal pointed out that there are multiple ways to measure inflation, such as CPI, excluding food and energy, CPI trim, CPI median, and there are more. And this gives the bank a lot of flexibility. Essentially, they can choose the inflation measures that best supports their current policy goals. If they want to cut rates, they can point out to lower inflation numbers. If they want to hold off, they can highlight higher numbers. So it's always like said that stats are you can make up whatever you want to make up from there. I'm getting my throat dry today. I don't know why. That's why I kept my water. I hope you drinking your water as well. But it's interesting now how you make the adjustment and how economists as well as banks, how financial institutions, they read the data differently. It's the same data, but they can point out the one number to the other. But it's all to support their policy. So my question was inflation trends and their impact. How is inflation influencing the Bank of Canada's decisions? Because definitely we're seeing that inflation was so high. We're seeing some numbers inflation's going down. So he said that inflation is a critical factor in the Bank of Canada's decision-making process. And Tal emphasized that the bank focuses on the rate of change in prices rather than the absolute level of prices. For instance, if food prices were rising by 10% last year and they are now rising by 5%, this is considered disinflationary. The Bank of Canada is more concerned with the slowing rate of inflation, which supports the case of cutting interest rates. So even if prices are still going up, the fact that they are going up more slowly is what matters. And he said exactly, the Bank of Canada viewed this as a sign that inflationary pressures are easing, and this is why they might feel comfortable cutting rates even if prices are still rising, but just at a slower rates. Now, I'm a realtor. I'm always have a concern about what's going in the housing and what is the current trends in the housing market. And according to Tal, the housing market is experiencing a slowdown, which is not a surprise, which Tal described as a healthy adjustment following the rapid price increases during the COVID-19 pandemic. He highlighted that the market is moving towards a semi-equilibrium state. However, the affordability crisis remains a significant issue. With the generation of potential homeowners struggling to enter the market, he pointed out that the influx of non-permanent residents has exacerbated the housing supply shortage. So that's a lot to unpack. So I wanted to know a little bit about what is semi-equilibrium state. A semi-equilibrium state means that the market is stabilizing after a period of rapid growth. Prices are not crashing, but they are not skyrocketing either. It's a more balanced market where supply and demands are starting to align more closely. But my concern is, like always, it's not supply and demand. I think like there's more demand than supply. And what about the affordability crisis? How is that being addressed? So he mentioned that the affordability crisis is a major issue that needs urgent attention. He warned that if it's not addressed, it could lead to a social unrest, rental strikes, and anti-immigrant sentiment. And he said, well, the governments need to treat this as an emergency. I couldn't agree more that they have to take this as an emergency and take comprehensive measures to improve housing affordability. Not sure how they're going to do it, to be very honest. Well, it depending upon, if they increase the wages so people can have more money, but when you're going to increase the wages, things going to be more expensive, and it's going to balance out. Like for a short period, we will feel that way, but it will be balanced. It will balance out again. So, what is the solution? Which I don't think I have an answer for that. If you do, share with us. I'm happy to hear from you. And talk about how's the labor market performing and what does it mean for the economy? Because that's the other concern we have. Job losses are happening, and businesses moving out from the country or changing their locations. How labor market is performing. So according to him, the labor market is showing signs of normalization. With both short-term and long-term unemployment rates rising, this is actually good news for the Bank of Canada. They say, any bad news for us is a good news for Bank of Canada, which is interesting, which is true as well. And it indicates that the economy is cooling down, which helps in the fight against inflation. He also mentioned that the Canadian economy is in a per capita recession. So we are in recession already. But he used the term per capita recession with GDP and consumption for per capita declining. However, overall GDP growth remains positive due to strong population growth. A per capita recession. I want to know a little bit more about that. And I think you probably want to know more about it. And a per capita recession means that when you divide the GDP and consumption by the number of people, the figures are actually declining. And this suggests that while the total economy is growing, the average economic output per person is falling. And this is largely due to the rapid population growth outspacing economic growth. So there are some key takeaways from this economic update. And the key takeaway for me are the Bank of Canada is likely to cut interest rates soon, influenced by disinflationary trends. Positive for us. The housing market is adjusting, but affordability remains a critical issue. So it's kind of thing, it is adjusting, but if we cannot afford, we cannot buy. The labor market is normalizing, which is a positive sign for controlling inflation. So inflation is coming down, but again, it depending upon which measure Bank of Canada look into and how is going to is that going to support their policy or not. And the fourth one was the Canadian economy is experiencing a per capita recession, but overall growth is supported by population increases. So we complain about immigration, but actually it's helping a little bit. So thank you for tuning into a Real Estate Wisdom podcast, and stay tuned for more insights and updates on the real estate market. I would like to know from you, how you feeling? Are you going to buy a house if the rate cut happen or not? It's not going to impact you. It's not going to change your affordability that much. Definitely is a good news for people who already in the home ownership and they're paying higher interest rates and their renewals coming. If the rate cut happen, it will be a relief for them for sure. But how is going to impact first-time home buyer? Are they going to make a decision? I know affordability might help a little bit, and you might be able to make that decision. I'm also doing the first-time home buyer seminars. I'm going to do more about this, not only but I'm recording this on Friday. I'm doing tomorrow, and I can let you in next episode what people have a questions, like what first-timer buyers have a questions about this economic instability and a lot of confusion out there. But I'm here to discuss things like, I love to know your views. I love to get the views from, people who are creating the policies, economic updates, but also looking into the ground level, while I'm working, what's my realtor colleagues are saying and what they're seeing, and bringing all that information in consolidated form for you to consume that, chew it, and then you can make an informed decision based on your knowledge, your information. More transparent in that way, rather than manipulating the data and telling you, hey, this is great, it's happening, and you should buy it or not buy it or sell it right now because you're going to miss the boat. No FOMO. Shouldn't be FOMO anytime. Fear of missing out. You should make a decision based on your needs, based on your financial capabilities, based on your risk tolerance. That's how you should make your decisions. And if you make decision that way, you'll be much happier. You're going to have less anxiety, and you feel proud of yourself, the decision you made. Sometimes we win, sometimes we lose. We cannot win all the time, and we won't lose all the time either. But the end, things work out if we take calculated risk and if we make informed decisions. Thank you again for watching. Love you all. Bye for now. Until next time. Content in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.